Welcome to this presentation on financial versus managerial accounting as part of Strathfield Solutions Understand Managerial Accounting in 5 Minutes mini-series. Today we're going to be looking at the differences and similarities between financial and managerial accounting and how those two practices interact with each other. So to start with, we'll look at financial accounting, and financial accounting is a system of record keeping that takes business transactions and records them in a manner that external customers use. So external meaning to the business itself, and some of the examples of consumers here include investors, regulators, and creditors, people who have loaned money to the firm or invested money in the firm, as well as regulators such as the Securities and Exchange Commission and others. The reports produced from financial accounting, the statements are generally produced on an annual and quarterly basis. Sometimes these are referred to as the 10K for annual and the 10Q for quarterly filings with the Securities and Exchange Commission, the SEC. The general set of statements, you may be familiar with these: the income statement, balance sheet, statement of retained earnings, and the statement of cash flows. So financial accounting is a system of records which allows us to produce these reports for consumption by external parties, and it uses accrual basis double entry bookkeeping with debits and credits. So it's a much more standardized set of reporting and recording the business entries, and again, it is used primarily by those who are external to the firm. Managerial accounting, on the other hand, records business transactions in a manner that internal consumers use. So now managerial, think managerial and manager. They include management, directors, and employees of the firm. And these are more as needed basis reports. So things like variance analysis reports, other types of information that are not required to be produced on a formal schedule, but rather as the company needs them, they are able to use managerial accounting to produce them. As mentioned, there are a general set of statements that mean contribution income statement, variance analysis reports, master budgets, and overhead analysis. So it can vary from company to company. It's not the same set of statements for each company that is required as it is in financial accounting. And typically managerial accounting does not comply with generally accepted accounting principles, and it's not typically audited. So whereas financial accounting generally must comply with GAAP in the United States, the managerial accounting reports may or may not, and typically they don't. So those are some of the differences. Now, if we look at it side by side, financial accounting is again made for external users. By comparison, managerial accounting is used for internal purposes. Financial accounting is produced quarterly and annually, so on a schedule. And again, the managerial accounting reports are produced as needed. The financial accounting side produces general purpose statements such as the balance sheet, the income statement, things that we're familiar with from a public-facing view. And on the managerial accounting side, they're very specific to the need of the business, such as a variance analysis report created as it's required or needed from the business. Usually, like we talked about, financial accounting must comply with generally accepted accounting principles, at least within the United States, and managerial accounting may or may not, and typically it does not. And then finally, the financial accounting statements use accrual basis accounting as opposed to cash basis, whereas managerial accounting may or may not, or it may not even be applicable to the type of reporting produced. So a quick quiz to make sure you understand the differences between the two. First question is a fill in the blank. Users of financial accounting reports include blank, creditors, and regulators. So here the answer we're looking for is investors. So these are external parties to the firm, and so that would be the group of users for financial accounting reports. The next fill in the blank here is managerial accounting reports are produced on a blank basis. And here what we're looking for is on an as needed or ad hoc basis. And then finally, true or false, managerial accounting reports are required to comply with generally accepted accounting principles or GAAP. And that's false. But financial accounting reports generally are required to comply with GAAP, at least within the United States. So hopefully that overview and comparison between financial and managerial accounting was helpful to you, and we encourage you to visit our website at stratfieldsolutions.com or check out our YouTube page for additional financial and managerial accounting topics. Look forward to seeing you in another lecture soon. Thank you.